If you are one of the people asking this question right here, please don't skip this video. Hear me out, right? Um, the stock market has been around since 1792, which is roughly about 230 years to date. Um, roughly about. Um, since then, the market has always moved in three directions. Only three, right? The market can either go up, go down, or move sideways, right? And one thing for sure is that whenever the market drops, it always come back up, right? Now that we got that out of the way, we need to understand that there is something we call bull market, which is the stock, the market, basically going up, and then there is something we call bear market, which is the stock dropping, right? Now, because we are essentially still in the bull market, in order for us to confirm that we are in fact in the bear market, the stock market has to have dropped at least 20% from the most recent high, right? And we can do that by looking at some ETFs, to see, right? And for instance, let's do that. We're gonna look at SPY, right? All right, this is one of the ETFs, right? This is the S&P 500 right here. The ETF stands for Exchange Trading Fund. So this is the all-time high right now for SPY, which is what, $674.94, right? So we're gonna test from here. We're gonna test to see how much the stock has dropped already since Friday, right? So how do I do that? I come here, I look at the info line, right? And I'm gonna place it at the most recent high and drop it down, right? So if we look here, the stock had dropped about roughly 3%, 3.7%. So technically we're still in the bull market, right? We're nowhere near the bear market. Now let's say tomorrow, we drop to here, down here to this next level right here, it would still be at 6%. So we would still technically be in the bull market, even if the stock continues goes down tomorrow, right? So with that said, if we do confirm in fact that we are in the bear market, meaning that if the stock just continues to drop and we get to a 20% mark from the most recent high, then in that case, I understand that everybody has a different investment goal, but this is what I would do. So by no means, this is not a financial advice. This is what I would do, right? Because I want to keep my profits, whether I'm buying shares or, doing, option tradings and stuff, I want to keep my profits. So I would sell some of my securities to keep my profit, right? And wait for the stock to drop to the lowest. That way, I would buy the shares again at the lower, because this is one of the simplest trading strategy: sell high, buy low, right? That's what I would do as far as shares goes, right? And when it comes to option trading, there are different option trading strategies. You have the leaps, you have shorts, calls, you have puts and stuff like that. You have long puts. So I would trade options when the stock going down. I can buy leaps depending on what I see with my technical analysis. I can buy leaps, or I can just day option trade, like swing trade puts throughout the entire drop. And then again, this is what I would do. I wouldn't panic. I would just work with the market trend, and take it from there.